Hi guys, thanks for tuning in to another episode of Nuggets News and the final episode for 2020. And what a crazy year it's been. Who would have thought it would have unfolded like this at the start of the year? So I'm going to run through a little bit of everything off the cuff. I'll certainly do our more official videos with all the slides and have a look forward with some predictions for gold and silver, the macro economy, stocks and those sort of assets, as well as our crypto big picture stuff that we did last year, and those videos were fantastic to do. I love putting that all together, and the majority of our predictions were fairly accurate this year. So look, before I maybe get into some of that stuff, I might just talk about the channel personally and the business, because it's been something that I don't ever like to stop and think about or project too far forward. I honestly love just waking up and taking it one day at a time, because there's always so much to digest in the crypto world that by the time you get through it all, make some content, do some posts, interview someone, be a guest on someone else's channel, it's midnight again, time to go to bed, and then wake up and do it all again. So it is good to, I guess, reflect at the end of the year. At the start of the year, Nuggets News had 65,000 subs, and we're now sitting at around 105,000. So look, that was a little bit of a goal of mine. It wasn't so much about the numbers. It was more, can we get there without doing clickbait and doing a lot of the things that maybe some other channels do to get the huge numbers. And it's really about the quality of the audience. And hopefully if you're watching this, you're the sort of person that doesn't really like clickbait and you really like diving into the fundamentals, the on-chain data, a lot of psychology and sentiment that I truly believe drives markets. And boy, oh boy, hasn't that helped us this year, whether it's the stock market or crypto assets. I think you'd agree that psychology and sentiment has played the biggest hand this year with all those price movements. In terms of the YouTube channel, I think we're sitting on around 4.5 million views at the end of the last year, and we're up to around 9.5, I think. So 5 million views this year has been again, amazing just to know that that is content that is educational and getting a certain message out there that people are digesting. That's what's exciting, I guess, more than the number of views. And we started making all our episodes into podcasts as well. Some special episodes are podcast only, but that's really grown. I think podcasts in general have taken off the last few years. But that as a standalone is just getting so many downloads now, particularly for our longer form interviews. People love listening to them as a podcast. So yeah, I guess thank you for everyone that's been on this journey, whether you're a subscriber, one of those 40,000 that have come in this year, or one of our premium members. So at the start of the year, we had a little bit over 1,000, I think maybe 1,500 members in our premium services, and we really wanted to get away from Facebook a little bit for a number of reasons, because we felt that the research we were doing was so much more than just being pigeonholed as a Facebook group when we're advertising to certain people who don't want to join a Facebook group. Now, our goal was to get that platform finished. That had a heap of challenges once COVID came out, and we had all these new staff and we had to work from home and talk to these developers in different time zones. And I felt like I was saying it's only a few weeks away, for months and months, and we finally got that out. That's been very popular, and we've now got over 5,000 in our premium services. The Facebook group remains a big part of that because of the community feel and being able to have discussions and see different points of view. That continues to work really well. But there's also a lot of people that they really want that structure for all our research, our headline analysis, our time-saving material, all those different products that we offer. We'll continue to expand that research. We've now got 5 different types of reports that people get, from gold and silver to the on-chain analysis, the fundamental analysis on crypto assets, macro analysis. We're introducing a TA report with Troy and Kyle, so the guys from Bull and Bear and DAX. And finally, the NFT report with Maddie, who's, again, someone who was pretty small and unknown last year. That sector's blown up. We want the best of the best to do some NFT and gaming research and reports for our members as well. All of the monthly episodes have been fantastic. I've enjoyed chatting to, Maren Katusa about those sort of assets, getting these different guests on. I think the regular content's been a real feature, and that focus on Ethereum, where people thought that, I was sort of shilling my favorite coin. I think people now appreciate and also agree that it's become a bit of a blue chip this year. It's really set itself apart from the field. Now, obviously, Bitcoin is just the king, and 30,000 as we near time of recording, we're over 29,000. Hasn't that been an amazing journey? But let's rewind a little bit to the start of the year. So, look, I think most people will forget, it feels like a long time ago now, that we had the bushfires, and it was actually central banks talking about climate change and how they would have to save us from that. And now narrative quickly changed in February, March, when COVID started to happen, to how they were going to have to save us from all that sort of thing as well. But if you rewind a little bit further, it's important to remember that a lot of the problems in the financial system started back in September before that with the repo markets. And so these were just sort of all excuses that were being used to cover up the real problems that were going on. And so, look, back in February, I sort of waved the flag a little bit and did a video saying the world has gone mad, because when it sort of broke out in China and we started to get some data, I was a little bit worried about what it would mean for Australia, because we've got such a close relationship with China. And now that has obviously come out in spades as well, and we're having some tensions there that's started to hurt our economy. But they're the sort of things that I was fearful of. But then it started to spread, and we got numbers out of Italy, New York, and that's when I did that video with Raul as well, and just said, the stock market is completely ignoring this, and this is going to have a big impact, and we're going to have to shut down. Now, that happened, stock markets tanked. I know a lot of you avoided that because of that video, so that is fantastic to hear. We then had the capitulation in everything from markets, gold, silver, crypto. The Aussie dollar capitulated to 55 cents. And we were pretty positive about it getting a bounce, particularly with crypto. I was out there saying that, hey, I'm buying more in my super fund. I'm happy to buy here at 5, 6, whatever it is, 4,000 it got down to. This is a bit of a gift. We did think with stock markets that we'd get a bounce somewhere up to that 61.8% like we've had throughout history. With all the big crashes, we tend to get a bounce and then roll over. So that's probably something we got a little bit wrong there. But we were quick to change our tune and adjust our thesis when central banks went absolutely nuts with that money printing. Trillions and trillions of dollars to paper over these cracks, and most markets, particularly the US, just kept drifting higher with barely a pullback. Now, that was the same for crypto markets, and we were very clear there, particularly for our members with our daily analysis, saying, don't wait for a dip. Have your ticket on this train, okay? It's leaving the station. We think we're going to 100,000 in the next couple of years. Stop splitting hairs over these little pullbacks, and people that are selling. We saw it in the on-chain data, people selling out at 10,000, 13,000 because they thought, it was a weekly resistance level or something minor. Next thing you know, we're at 29,000 and we've barely had a pullback. And people that have got that hodl stack, they're just so glad that they had that ticket to the station and they've held on. Now, at the moment, I think I spoke about this morning, things have gone pretty parabolic, and stock markets are at these record levels. But, you can hate it all you want, but as long as this money printing is just going nuts, conditions have literally never been easier. Interest rates have never been lower. I think the world leaders would rather have a bubble than a crash. They've got enough problems to deal with. So I don't really see why that's going to change anytime soon. The weak point here, the breaking point and the canary in the coal mine is really currencies. And the final straw to break there I spoke about was the US dollar, even the Aussie dollar a little bit. There was these few countries that had interest rates still at 2 or 3%. They were going to end up at zero, probably go negative. And once everyone is there, then the world wakes up. It's a little bit like the retail investor. All of a sudden they see a negative interest rate on their bank account and they go, hold on, I've got to do something here. I'd rather be in gold, I'd rather be in Bitcoin. It's only a tiny difference from, 0.25 to zero, then to negative. But it's a specific thing in their mind that changes once they start paying a bank. So I think that is a huge theme to continue into next year. We spoke about and predicted that the level of negative yielding debt would break that all-time high of around 17 trillion. We're now at that mark, 18 trillion, whatever it is. So we did break that. The balance now comes between central banks welcoming inflation and saying we're changing our goals and the goalposts. We've undershot for too long. We're now going to try and overshoot. We're going to welcome inflation. So that's a bit of a dangerous game. They're printing more money than they were at any time in the past 10 years, even during the QE 1, 2, 3s. The central banks have gone nuts. Even the Aussie central bank, where things are pretty good and rosy, they've started to print $100 billion and they can't even get the Aussie dollar down. Who would have thought that printing $100 billion would make your currency stronger? But that is it's all relative, and other countries are all doing more easy money than Australia. So for the time being, hey, the Aussie dollar is drifting higher, and that's a real worry because of the only way to put that out is going to be more crazy money printing. And what does that mean for assets? Anyway, I will go into that in more detail in the future. But in terms of the macro, yeah, we had that bounce, we had the recovery. Obviously, things like hotels, airline, tourism, they all got smashed, but it was the software, the online, the digital business that really benefited. And people woke up to these things that were already under their nose. And I think I completely agree with people that are saying it just accelerated the adoption of things like Uber Eats or doing meetings via Zoom. It was all there. There wasn't really much new to come out, but businesses adapted, and those that did have done fairly well. I think a lot of people in local areas got out there and supported local. I've certainly noticed that, where I live in Tasmania, some of the restaurants and shops and that said they were worried about going broke in March have said they've never seen better months in recent times, because everyone, once they can get out of lockdown, goes out and supports local. So yes, we've got these travel bans and restrictions, but I think everyone is going to try and support those local businesses. One thing that I do worry about is Real Vision and Raul and other people have spoken about liquidity versus solvency. So it's one thing to keep some of these businesses alive, but the businesses that haven't adapted or are just old business models that have been kept on life support by central banks, that's the real worry. It's something like 20% of businesses are zombie businesses now. They can't even pay the interest on all their debt. And we've had a really low number of bankruptcies in a year where we've been in recession. And that's all because the rule changes of kicking the can down the road. You didn't have to pay your mortgage. You didn't have to pay whatever it is, bills. And all that is coming due. So whether it's on the individual level with JobKeeper, JobSeeker, in Australia, we've got those programs. In the US, they've got different names around the world. Those sort of things are coming to an end. Governments are worried about the huge debts and deficits that they're running. So they're very mindful of that, and they're looking to cut back. But if that happens, we're going to see a huge uptick. And I think in Australia, we had the big banks announce the forbearance on housing loans. They're not going to be able to kick you out of your property for a year or so, because they know that if they let things go, then they're going to see this huge uptick. And they don't want to be dealing with a huge number of repossessions and then having to sell those on market. That's going to push the price down of housing. That's going to create a self-fulfilling prophecy, a downward spiral. And that's not what they want at all. Again, they'd rather have a bubble than everything crash on their watch. So they're, I guess, the macro themes that I'm watching. The relationship between China and the US and Australia, all these different countries it's reached some interesting levels. I spoke about tourism, education, our exports, all those things that we're so reliant on that we covered in the documentary 2 years ago. They're the things that China have come down against Australia on. We're going to have to look to modernise our economy from 92nd in terms of economic complexity. All these things that we predicted are coming to fruition. So I hope we can upgrade and update our economy into the modern world. Otherwise, we are going to be in a little bit of trouble, I fear, when the focus is just on, more first home owner grants, first home builder grants. How can we boost the price of houses? Let's make 5% down loans for first home buyers. We can have 1 million houses. That doesn't create any good jobs, technology, healthcare, all the things that the world needs or that we're going to export to the rest of the world, like these other companies that have just taken off this year that are innovating. So that's the way I'd like to see things go. Central banks are going to continue to print money. Governments, are they going to step up? So is the fiscal side of things going to come into play? I think it's a definite yes, and that's where we do edge closer towards inflation. We've seen commodity prices start to go up. China are stockpiling. The huge discussion point that I think is a turning point in history is when we start to say, well, hold on, every country has got fiat money. They're printing it out of thin air. It's not backed by anything. Why are some countries with all the commodities and the real assets, the tangible, the valuable things, going to keep giving them to these other countries for this intangible, unlimited thing that doesn't exist, that's just numbers in a computer or just bits of paper? Something there is going to change, and that's going to be a massive turning point. And that's when people are going to rush towards anything that is real. And whether it's gold and silver, I think are going to have a huge resurgence. I kind of laugh when people are saying that Bitcoin's killing gold, or gold's a pet rock. the drop gold campaign by Bitcoin, Grayscale. Whenever that's the sentiment, I just think that gold is going to have its time in the sun. Bitcoin got to a $500 billion market cap recently, but that's nothing. Okay, it's gold in the tens or 20 trillion, whatever the market cap is at the moment. That's where all that huge money is. There's hundreds of trillions of dollars out there in currency markets, bond markets, asset markets. That is going to go into gold. Maybe a bit goes into Bitcoin, but it's still, gold is now, I think, almost the best currency in terms of large cap. So I still think Bitcoin is probably better money, but it's just too small at the moment for that huge money to park itself in. So yes, gold and silver are going to have a huge resurgence as rates go more deeply negative. The US dollar expanded its money supply, M1 and M2, by 30% this year. These are just crazy numbers where people like Michael Saylor are blowing the whistle. We've got sports stars now demanding to be paid in Bitcoin. So that was another thing that we predicted. The next wave is going to be celebrities, sports stars. Now we've got corporates. I don't think people really understand the importance of what Michael Saylor and MicroStrategy are doing. The last round of funding they did, where they issued debt, money is so easy to borrow at the moment. Apple, all these big companies are borrowing billions of dollars because they can basically get money for free. In some countries in Europe, it's negative interest rates, so you're actually being paid to borrow. And now you can get paid to borrow money to buy back your own shares or buy Bitcoin. And that is, I think, again, it's a waving a flag and calling out the weakness or just the really exposing how bad the system is. Because it's one thing for one company to do it, but what happens if 10 companies issue billions of dollars, $1 trillion in debt? What happens if there's that much money borrowed to buy Bitcoin? It really just exposes this thing that's completely unlimited and free. And then you're buying something that's real. So maybe companies start issuing debt to buy gold. We've seen Iran announce that they're going to be buying all the Bitcoin that comes through their country to do trade with. So I think there's going to be a huge rush. Russia and China have already been stockpiling gold for ages. I just think you're going to see such a rush to stockpile things like maybe it's copper, iron ore, like anything tangible, as well as gold. And then I think Bitcoin comes into that equation as well. Because in a world of digital money, it's a digital measuring stick. It's the only real thing that's kind of got that certainty around it, compared to all these other currencies, which are just, it is now a joke, the currency wars, when the US dollar world reserve currency has created 30% more, and all the unfunded debts and liabilities they've got, they're going to have to continue to do that. So while that happens, there's no real price target or sell point or equilibrium for gold or Bitcoin or things that are finite in supply. You can't say, well, that's the price target or that's the fair value, because every year it's going up by 30% against the US dollar, but maybe it's going up by 300% against the Venezuela, Argentinian, Zimbabwe currencies. So it's relative against all the different currencies, and that's why it can have an infinite upside, because it's priced in something that is infinite, that is being created by the trillions now. So that is really crazy to think about it in that way, but I think that's what you've got to get your head around. And when Bitcoin goes from 10,000 to 30,000 in a matter of months, that really is why. It's not so much Bitcoin going up, it's all these other currencies just going down relative to it. I think that theme of software and online companies continuing to benefit in some ways, when they've got cash on their balance sheet and you've got the other end of the spectrum with all these zombies, that is where these PE ratios of how valuable they are. Well, you can argue that one's can't even pay its debt, one's got billions of dollars on the balance sheet and can borrow billions more to buy back their own shares or to buy gold or Bitcoin. That is just where those scales continue to tip. And it's the same in the individual economy level, where the little guy on the street is battling to get this paycheck. In America, they just dropped those $2,000 checks that they were overturned. It's now back to $600. What on earth is $600 going to do for these people that are struggling? Millions of people that can't afford their rent and all that, versus the wealthy guy that has assets. His stocks are at record levels. He's got all these properties. Interest rates are now lower. The bank is confident to lend to him. The bank's not confident to lend to this guy, even if he wants to start a business, okay? It's just too risky for them when they can do everything else under the sun with the free money to make profits. Big banks are not going to take the risk on the little guy. So when I talk about the economy as this sausage machine where governments keep pushing QE and money in and doing certain policy changes, and the same result keeps happening. Stocks go up, property goes up, the rich get richer, and inequality widens, and they're sitting there scratching their head going, geez, why is that? And something there has to change. It doesn't matter if you do tax breaks, give out these bonuses, first home owners grants, everything is just tipping in favor of those that are wealthy and already have assets. So until something really has to change there, and even if it doesn't change from the policy level, it's going to come from grassroots, whether it's the yellow vests or more protests. One by one around the country, we've just seen civil unrest and people take to the street. They know that their voice can be heard. We've already seen instances where things have been changed because of people raising their voice. Now that's going to clash with this whole social media, online. Regulators are cracking down on all that side of things as well. That plays into the whole privacy. It plays into this, they want to make sure that everyone gets this vaccine, and then they want to monitor you. So everything that's encroaching on our civil liberties, our freedom, our privacy, our health, should you be able to make decisions about your own body, they're the big clashes that are going to play out on social media. They're going to play out in the real world. I think we need to be having these conversations in the open rather than trying to, you're not allowed to talk about that. You're going to be silenced. You're going to be charged. Police are invading homes in Australia of people that were joining Facebook groups or trying to organise protests or this is just really nuts where this is all going. And I don't think it's getting better anytime soon, particularly if unemployment is going up. Real unemployment rates, youth unemployment rates, these are a lot higher than the rosy picture that we're being painted at the moment. Okay, so inequality, that's the big theme there. I think I've just about touched on all the macro things that I wanted to mention. I remember the crash, and yeah, it's important to go back and learn from that when everything was just falling and there was such fear in the market. Oil went to minus $40. People bought at zero thinking it can't possibly go lower. So I think if you haven't been in markets like crypto that are volatile, you can learn a lot from that sort of crash about what was the sentiment like at the bottom, what was everyone saying. Markets can't go lower. Markets will always can and will go lower, can and will go higher. Bitcoin's proved that to the upside again this year. Oil proved that to the downside this year. Learn from all those things because there's a long road ahead, a lot of volatility, and there's going to be lots of opportunity. Okay, so let's talk about the crypto side of things now. Bitcoin, as we entered the year, it kind of had a bit of a run and it was correcting. And I don't think anyone really predicted that we were going to be at these levels. It certainly wasn't priced in things like the options market or the futures market. But it does not really surprise me that we're here now. Look, when we went from 1,000 to 20,000 in 2017, and I was speaking about, the biggest breathtaking rally of all time is going to blow everyone away. I sort of started to say similar things, and particularly in the middle of this year when the QE ramped up. There were stages where I thought, do we need to be a little bit cautious? Have we come too far too fast? And then, going for the walk, meditating, clearing the head, coming back and saying, I don't think we've gone parabolic yet. That was what I think I started to say at around $16,000, that, this is nothing. This can really go parabolic. We can have a blow off top. Do not sell now. This is going to blow people away, and a lot of people are going to get left behind that have sold too early. Now, again, I'm certainly a little bit cautious. I think I said this morning, we've started to see a little metrics ticking up, some coins being sent to exchanges, some old hodlers that have been hodling for years. You can see on chain those coins are moving. I just think at 30,000 with a weekly RSI at 92 or whatever it is, the risk to reward now, I think, is more in favor of things like Ethereum that are still 50% down from all-time high. But in the long-term stack, I don't think that means you sell your Bitcoin necessarily. You just got to appreciate where certain parts of your portfolio go up while other parts don't, because 90% of you are going to lose money when you try and time the market. Bitcoin could have a sharp correction of $2,000, $3,000, $4,000, and it might only last a day, or it might chop sideways for weeks on end, and it's not really possible to buy back lower. They're the sort of things where I think people get really tripped up, because you've got to keep that end target in mind of, I honestly think 100,000 within 12 months is on the cards, as long as all this money printing continues. And the big war in the crypto world is going to be privacy and regulation. I think Litecoin, that's had a great run recently, actually has a huge role to play in that. So people laugh and joke that it's a test net. But when we have all these new privacy features and upgrades coming, they're all going to be done and implemented on Litecoin and tested out. And that's going to push the regulatory and privacy boundaries. It's going to pave the way for Bitcoin. And I honestly think that is super, super valuable in and of itself. So it's no surprise to me Litecoin's had a bit of a resurgence. Obviously, XRP has been cracked down on by the regulators. That was the third largest asset. Previous years, Litecoin was always the big three that I used to speak about in 2017. So maybe it does have a bit of a comeback, and maybe it can get to top three. Look, I probably think that Tether and stable coins are going to continue to just have huge growth. So those stable coins could even pass Ethereum or maybe Bitcoin in terms of the value, but that's almost a different class. We've got to think of those as now. And that's all short-term noise. So even if stablecoins grow to $1 trillion and they're used widely around the world, I think ultimately all those stablecoin investors come back to Bitcoin because of its scarcity. Because you can have $1 trillion of stablecoins, but they still get devalued by 30%, relative to everything else when the US prints 30% more dollars. So people are going to wake up to that message, and it's more in developing countries where they treat the US dollar like gold. They're going to wake up to the power of Bitcoin and digital gold even to some degree. So the big themes this year were DeFi. It took off, mainly led by stable coins. That was something that we've been bullish on for years and years before it was called stable coins. Very, very proud of the group, our researchers, head of research, Matt in particular. I know personally, Synthetics was one of my favorites that I've been harping on about since it was a few cents even, and now that's gone to $8. And I think Palm Beach, that expensive newsletter, have put out a price target of $1,000 a coin. So a few of you are going to be billionaires in the group if that happens, but maybe that's a little bit of wishful thinking. But I do really love the fact that they've seen 100x growth. They had a nice correction in August, a nice shakeout, but all those metrics kept ticking higher and haven't slowed down. I think a lot of those projects that have tried to decentralize and become DAOs, that is another huge theme, because regulators are going to come after any platform that's got synthetic oil, synthetic stocks, the CFTC, the SEC. They're not going to like those sort of products. And if they can't go after a one CEO or one person or one hosted server, these things become like Bitcoin in terms of being truly unstoppable. So that decentralized theme, the DAO theme, decentralized autonomous organizations, that's so important going forward. Others that we love, all the DeFi assets still bullish on. I think large cap coins, money will flow into large caps. I've been saying that for years. Look at the products, the Bitwise 10, the Grayscale large cap fund, these ETFs and these investment products. Money is going to flow into those large cap coins. So that's a kind of very easy, very safe play for people that want a little bit more diversification other than just Bitcoin. And we've also heard about, Grayscale saying there's more and more ETH only investors as ETH becomes a blue chip as well. ETH has got so many bullish catalysts around the corner. ETH2, that staking, being able to earn 15% on a digital asset, that software, online, macro narrative and theme, being able to earn that huge interest rate in a world of low or negative rates. Scarcity, as Ethereum not only starts to burn all those fees, the issuance or the overall supply could actually start to shrink, which is just amazing. Everyone that's bullish on stock to flow, ETH is going to have a better stock to flow than Bitcoin. So it doesn't mean it's better money or it's going to replace the king. It just means that it's hardening its monetary policy. So the issuance is going to be lower as we move to proof of stake, but as well as that fee burning. So if you try to calculate what's the profit or the earnings of Ethereum, compared to these other tech stocks, I just think it's so undervalued as the backbone of this new internet we're building. And then under that software layer of the new internet is the Web3. So the hardware, more of the software. So the VPN, virtual private networks, file storage, computation, all those sort of things that fit in my DWEB Web3 narrative. That's what's going to make all these networks truly unstoppable. The layers of protocols that all snap together. And then the other things that I talk about, gaming, NFTs, that digital online world, it's going to continue to grow. I think the what we've seen recently in terms of cracking down on privacy, as more and more businesses come into this world, they're going to demand privacy. So that's going to make the debate interesting. We've seen a lot of hacks. Look at the Ledger data leak. Whenever we centralize things and create a honeypot, governments are talking about this stablecoin act. Whoever's got all that information, it's going to put a huge target on their back. And when we get those leaks and hacks, that just rings the bell for why these things need to be decentralized and why we can't have one person with one password on one server, government controlled. It is just asking for trouble compared to this decentralized, encrypted world where we do live in. Now, that's not to say that we don't have all other types of hacks. We've seen so many on the world of DeFi, smart contract bugs. We're probably going to see more standards in that area, more audits. I think that's going to get better. We are probably going to see a huge hack at some point, and that's going to demand that these standards get met. All the good projects will meet these standards, and investors will only invest in the ones that get audited and meet these standards. So, look, I think that space is maturing. So much money is going to pour in when they're confident that they can get insurance and they can get 15%, but they want to know that if something happens, they're not going to lose their money. So whether it's Nexus Mutual, Cover, they just got hacked or bugged themselves recently. There's a few others, Opium Network, that I'm going to be doing a little bit of work with. I'm very excited about the options and credit default swaps, so the policies that they're going to have in this area as well. There's plenty of great projects that are solving all these problems that I'm looking forward to next year. Layer 2, another huge scaling theme, optimistic roll-ups. The team at Optimism, they're going to help, I think, whether it's Uniswap or Synthetics or Aave. Then you've got all the ZK technologies, ZK Rollup, ZK Sync, the payments networks like Loopring. And then you've got side chains like XDAI. I think that's awesome, absolutely awesome. Check out the interview with Austin Griffith if you haven't already. And then the other ones as well that are all unique. So the Raiden network, which is kind of like the Lightning network, I think that's going to have its place. Some people are going to want that style of scaling solution for their product and dApp. Amisa Go, the Plasma, they're targeting things like central banks or between exchanges, okay? Each of these little technologies has different trade-offs, and it's going to have different use cases, and they're going to get adoption. And we're going to see certain winners, or not even losers, but some are going to get adopted more widely than others. And at the moment, I think Optimism is probably the lead there. But once we have a lot of the best projects that are scaled, that is just so exciting. Now, maybe it happens on things like Polkadot or other complementary chains, Cosmoses of the world, maybe the Cardanos or Tezoses, EOSes. I think they're really going to have to find a niche or offer something that's just a standout product for end users, because ETH does have the network effects at the moment, but it hasn't moved to proof of stake yet. It hasn't solved the scaling problem yet. So the next few weeks and months are super important. And I think that's just going to make such a better user experience. The front ends are going to get better. The user experience as competition heats up. Gone are the days of having to try and battle your way around IDEX and MetaMask. It's going to become seamless for the end user. So adoption is the huge key next year about actually getting end users to use your product. And adoption is going to come through celebrities, corporations, big sovereign nations talking about it to their citizens. We've already seen a lot of that in the media pick up on it. Just look at Visa adopting stablecoins and picking Ethereum. Microsoft are building on top of Bitcoin for their ID product. We've got them building on top of Ethereum as well. Ernst & Young have got this suite of products for enterprises to use that they've open sourced. So many other chains, whether it's VeChain, Origin Trail, pick these projects. Icon, they've got working products. They've got revenue. They've got end users. I think, I've really favored Red Fox towards the end of this year because they've got multiple products in multiple industries, bringing in revenue in the real world. So they're the sort of things that are going to make their way up the list. A lot of the things in the top 10 or 20 are still ghost chains that don't really have any uses or any revenue. And that's where I think we're going to see a big rotation in a bull market. Money's going to be a little bit more fussy in terms of where it flows. Retail hasn't really come in yet. So that smart money has been pretty specific to Bitcoin, ETH, and a handful of others. There's a lot of new crypto funds starting up. So money is going to go into certain things, and stick with strength. There's a reason money is going into these things, and they're going to continue to be the top picks. They're the things that we're going to be focusing on next year. We want to continue to grow. We're going to start rolling out some new features, maybe even some new content creators. You'll see some new faces on the channel. A lot of that research in the group. We want to have that community absolutely top notch. As we enter this bull market, we want you guys to be absolutely across everything. We don't want you to miss a beat. We want to try and help you pick the top. I want to be telling you when I'm taking profits, when I'm rotating into ETH or alts, what are the trades that we're liking, honest conversations about what are the threats. Is it time to rotate into gold and silver, that risk to reward? They're the sort of things that we're looking for, continuing to partner with the best businesses and give you guys opportunities there as well. But thanks to everyone that's joined us on this journey this year. It's been incredible. For more information, head over to nuggetsnews.com.au or Collective Shift, our new website and new platform. Sign up if you want to start getting all our research. But look, I hope you all have a happy and safe new year, and we'll talk to you in 2021. So cheers.